Hey everyone, I'm Charting Man Dan with the chart guys. I'm on vacation, I've got a fever, and I've got poor upload speed. So we're going to keep it a bit concise today, check in on the broader market, and see where we stand as the bulls attempt to bounce on Friday, but certainly still a lot of work left to do. So the S&P 500 on the weekly time frame, we had these clear weekly higher lows for a 6-month period ever since our August flush. And when we lost those for the first time, we could say this is a different market environment from the last 6 months. Now I'm looking at it from the perspective of the bull market the last 2 years. And the EMA 12, if we look at the NASDAQ, it's a bit better. The EMA 12 here has held every period of consolidation on the way up, and we're testing it now. So it's the same mindset. If this holds, nothing is different from the last 2 years of bull market. If we lose it, then I could say this is different for the first time in 2 years, and that will show me the macro is changing even more significantly. So I'm definitely watching that as a major factor here into March and April. And the other big check mark that the Bears need after following through significantly, remember we were looking at them playing defense. Can they go on offense? Yeah, they went on offense. Now the question is, can Bears confirm a weekly downtrend as a result of the next bounce? When's the last time the NASDAQ has confirmed a weekly lower high and lower low? And you're going to go back to July and September, pretty much this monthly consolidation, which was a bull flag, but it's been a while. So a year and a half almost where we have not had a weekly downtrend. And so again, the next big question is, can Bears prove it? Because there's been plenty of times where we see a significant drop and then just V-shape back to higher highs. So that's the next big check mark long-term for Bears. Can you confirm the weekly downtrend on both the NASDAQ and the S&P 500? Semiconductors, SMH has already done it. That downtrend is more believable. So that's bigger picture. Now let's look at shorter term. So shorter term, what do we care about for next week? Well, we have a 4-hour downtrend on the futures chart, and we have not broken that downtrend at any point on the drop. There haven't been any fake outs. We had this clear resistance zone where we rejected, rolled over, and even the bounce in the end of Friday. It's a nice bounce, but if that's going to be meaningful, ideally the bulls see a little bit of upside Sunday night into Monday, and then we must confirm the 4-hour uptrend. If we don't confirm the 4-hour uptrend, we have no meaningful daily bounce underway. There are a number of names that are starting to shape up the possibility of a falling wedge, so short-term bulls are watching to see if that can get confirmed. And we're going to look at a couple other names like Tesla that have one as well. But again, a lot of proving yet to be done. We didn't even confirm an hourly uptrend. We had a flush down, significant weakness. Yes, we bounced significantly and closed flat. That gives bulls hope that we can turn around short-term momentum, but still a lot of proving to be done. If we confirm a 4-hour uptrend, we then look to our daily lower high. And the last daily lower high was last Monday. And that's going to be the most important resistance. It's possible we just set another daily lower high and then continue down. So it's one time frame at a time. The futures 4-hour, excuse me. If we confirm the 4-hour trend change, we zoom out to the daily, we watch the daily lower highs, and again, big picture, weekly and monthly charts. SMH with the weekly downtrend already confirmed. Bulls at this point are just hoping for a monthly continued tightening range. All-time high, higher low, struggled in the 250s, and now the bulls really want to hold 199, and that's still 10% away. So again, it is possible, if the bulls can show up a bit here, that we remain within this sideways monthly range. And this one's been going on for essentially 10 months. So if we can hold 199, we will remain in a sideways range. And obviously bulls are really hoping for that. Same deal with monthly EMA 12. We've been holding it for 2 years. And this month we are at risk of potentially losing it. The financial sector, this was a big win for the Bears. We went from the all-time high, and then less than 2 trading days later, we were down 5.5%. So it was a very fast turnaround into a hard drop. We are technically still in well, it depends how you view it, this little dinky pivot. You could say we lost the weekly high or low. For me, the most important support is 47.15. And so that's a longer-term key level. Again, bull break with no follow-through. So bulls are tiring a bit. We go to the monthly chart. We're watching monthly EMA 12. Same thing. This one's been holding for a little bit less, but almost a year and a half. And the one thing that is missing, well, not missing, the one thing Bears want to see is rotation. That's what we saw in 2022, where we had sectors weaken and then the stronger sectors would roll over. And so XLV has been the strongest major sector. You can see this past week, just trading sideways and holding on. I'm watching, is this a rising wedge? Now, there's two things that are going to happen here if we break bear. Let's say we break bear and semiconductors and big tech stays weak. That's a big red flag for the bulls in the broader market as a whole. If we break bear on this, but it's a sizable bounce in semiconductors and big tech and the NASDAQ, that just shows us potentially some healthy bullish rotation. So if we do break this daily uptrend with a bear break of 147.24 on XLV, it's really important to me what SMH and QQQ are doing as that happens. And it was the same thing with XLF. You know, if when XLF rolled over here to start this past week, Monday, Tuesday, if the semiconductors and the NASDAQ had a solid 2-day bounce, that wouldn't really be meaningful to me. But it's because XLF and QQQ were dropping together that it stood out in terms of significant bear control. Also, if we're going to see significant further market weakness, XLV, as we've been talking about, would need to be a monthly head and shoulders into yearly consolidation. And so I'm definitely watching for this to be a possibility this year, but I'm not aggressively shorting. I would essentially need a level where I can say that's either the monthly lower high or I'm wrong and play off of that. And we don't have that set up for me at this point. Personally, with what's been going on, again, I'm being on vacation. I'm not really watching the markets much the last 3 days, but I have had a number of positions stop out. I had a couple day trade, NVDA, and Tesla bounces that I then turned into swing trades by trimming. Those both stopped out break even on Friday. And I've also been stopping out some swings. I had my energy sector swing, which we'll look at in just a moment. That stopped out. I'm on the verge of stopping out the last third of my Microsoft position. This is a very key support for Microsoft. But if we break 380, I will be all out of Microsoft, and that was a position from the 220s back in 2023. Exited 2/3, average 440, and so essentially I'm just trying to leave a runner, but if we break this support, I will be all out of that trade and not really interested in re-entering because Microsoft has been showing relative weakness to the NASDAQ over the last, I don't know, probably 6 months or something. Other than that, what else did I stop out of? I'm not sure much else. I am scaling out of my hedges. So I was in these hedges for a very long time as we just traded sideways, and time decay was definitely a factor because I'm trading SPXS and SQQQ for that protection. But I needed the bulls to convincingly confirm another leg up if I was going to exit those hedges. And they didn't. And so I am now, essentially I want to protect in euphoria and scale out of my protection into fear and daily oversold. This is enough fear for me to size down a good bit. At this point, I've exited 2/3 of my SQQQ and 2/3 of SPXS. SQQQ I exited Friday morning, and now I'm still in just a third, but essentially my goal is to just I want to be significantly bull leaning on any kind of meaningful bounce, and also I'm just trying to offset part of this drop. And so, at this point, my IRA is probably down around 3% from its all-time high, and that's partially because of the hedges, and that's partially because of my UNG position, my silver position. There are some things with diversification that are offsetting things a little bit, but S&P 500 pulled back 7-8%. And again, all I'm trying to do is just minimize drawdowns, and so far so good. I definitely know there's going to be drawdowns along the way, especially when this IRA is 30 years out before I do anything with it. All right, other names, Tesla. So Tesla, potential 4-hour falling wedge. Again, I stopped out. Maybe I'll make another attempt. The beauty about stopping out, break even or with tiny losses, is it's a try again card for me. I tried it here and stopped out, and I have been playing some shorts on the way down, got that daily lower high, shorted it a couple times last week, but I did stop out. And so I'm watching for potentially another reentry, but again, not really aggressive in this current market environment. And that's one thing that I've learned over the years and through many different cycles is when we get something that tells us things are changing for the first time in 6 months, 2 years, whatever it is, that to me just means pump the brakes, because we have to adapt and shift our trading style. Because if we do the same thing during a period where we're in X market environment, and if we trade the same way when the market shifts, we're going to get back a lot of profit. It's not the same thing. So I'm very much okay with, being mostly cash in my day trading account, having some protection, and just letting the dust settle a bit. And at this point, Tesla has pulled back so much, there's a lot of space for a monthly lower high. At this point, we're looking for a monthly equilibrium. Breakout, big retracement, scout a lower high. And that's just what RGTI did on the weekly. Remember 2 months ago, we were talking about this being the most likely scenario? Big retracement, lower high, trying for a higher low. We had earnings, relative strength Thursday and Friday, or all week really, after earnings. I mean, we're up 35% from the low. So we're trying for this weekly higher low. QBTS has earnings this coming week, but it is trying for the weekly higher low as well. So Quantum tightening up. The other names are weaker. QUBT, IONQ even dropped more significantly. Yeah, weekly downtrend confirmed. Again, if you run thousands of percent, you're going to pull back significantly. But we will be looking for monthly higher lows in some of these names. I'm just going to be extremely patient. Maybe I'll try an attempt where I say that's either the monthly high or low or I'm wrong. But again, same thing as Tesla. I'm watching for a potential equilibrium. It's funny how my brain, because I'm sick and have a fever, it doesn't work like it normally does with these freestyle videos. Tripping up. All right. So I am watching Quantum for weekly higher lows in the stronger names, monthly higher lows in the weaker names. Not aggressive. If I see a setup I like, I'll take a shot, but I don't care if I miss it. And it's such a superpower to not care if you miss a trade, because that keeps you picky and patient and wait for the exact setup that you want to come to you. There's always something else to trade. Dollar big drop this past week. The monthly chart is back. Anything above 115 is a monthly higher low, but we're back within the range that we traded sideways within for years. And with that, gold still strong overall. Daily chart needs to reconfirm an uptrend to be a bull flag. It's a possible weekly bull flag coming off all-time highs. Silver is a bit weaker. I was concerned. Again, I'm in a silver position. I was concerned that this is a monthly head and shoulders, and it still may be. But so far, March is alleviating some of that concern. Just need the silver bulls to keep the weekly uptrend going. But a top watch for me in March is the miners, because of the possibility of a cup and handle where we've got 13-year resistances. A top here, not there. A top here. Come on. So top there, and this is a bull flag. And so I like the risk reward because, again, the mindset is, if this low of 38.58 holds, we're going to see another leg up with a potential target in the upper 40s. If that level breaks, setup is invalidated. And so I love that kind of risk-reward setup where it's just a clear line in the sand, and that's the level you play off of. And again, I didn't get a position this week. Was being a bit picky with the travel, but if we pull back on the daily, I will make an attempt, and I'll put my stop under 38. And I'll use a position size where that risk is A-OK. But I like the risk-reward setup enough to give it a shot. Oil definitely pulled back more than I thought it would. We got a lot of support, 64, 65, and that's why we use stop losses. I was expecting a weekly higher low sooner and tightening range, and we had the energy sector equilibrium break bear. Entered here on the bounce, scale out some position, move a stop loss up with the higher low, move a stop loss up with the higher low, stop out. So I now no longer have any energy sector exposure. Clear weekly downtrend confirmed here as well. And watching this base of support, which is still holding, but again, just no longer interested in the setup right now after trying to let a runner go and stop it out. Natural gas still looking good. Again, this weekly time frame, if we can get over 471, things really open up, which is why my target is in the $5 at least. I mean, there's really nothing from 5 to 680. Or from 470 to 680. That said, again, I'm not going to sit through monthly consolidation in this position because we haven't confirmed a monthly uptrend yet. So I will keep walking up a stop, and I am going to walk up my stop on UNG now and stick it under $20. So stop here, little wiggle room. We'll see if we can get another leg up. No red flags at this point. But again, I'm bullish, but I put on my bear glasses and say, well, maybe this, drawn on natural gas, but maybe this forms a rising wedge into monthly consolidation. So again, just keeping an eye on that as a potential possibility. And just walking a stop up. and I'll stop out, and then maybe I'll make an attempt for a monthly higher low eventually. But I'm A-okay with a lot of my IRA going back to cash. Again, I'm not aggressively buying this dip right now. I'm using my day trading skill set to try and position for some things. So far, it hasn't worked, but no harm, no foul with that. And again, 4-hour time frame is what we care about in the short term. If you confirm the 4-hour uptrend, we zoom out to the daily. We watch the daily lower highs. Bigger picture, we care about monthly EMA 12. Can the bears in the S&P 500 and the NASDAQ confirm weekly downtrends? That's going to be big through March into April. One day at a time. I'm ignoring headlines, tariffs, whatever. I don't care. It's all price action. If there's a spike in volume and volatility on the 5-minute time frame, I look at what the headline is, but I am not making any decisions based on headlines. It is all price action. Appreciate the likes and shares. Hope you have a great week, and we'll see you soon.